Hey, what's going on, y'all? Brandon Snyder, team leader of selling with the Snyder Group in the greater Houston area, your go-to real estate team. And today I have a market report fresh from HAR talking about the past month being July 2023 and what the market looks like. So first and foremost, before we get into all of that, a little bit about us. We are a full service real estate team in the greater Houston area. We serve investors, first-time home buyers, multifamily, commercial. We deal with it all, and we can serve you whether you're relocating from California like we did or another part of the US, or you live in Houston and you're looking to make a move. We're happy to help, and you can contact us below if you want to stay up to date with everything we have going on, property tours, homes we have listed, market updates, etc. Just like this. We'll drop another one in September. Feel free to like and subscribe, turn that notification bell on. That will help you stay in touch with us. If you have any content questions about anything we've gone over today, feel free to reach out to us as well. Our contact information is below. Market report came out from HAR. HAR is the Houston Association of Realtors. It is the leading authority for data that's coming out of Houston right now. There's all kinds of different sources, Zillow, Redfin, things like that, but we use HAR and their statistics and their numbers as a really solid driven data point. So HAR came out and said the longest decline, 16 months straight, that we've been having, it is the most minimal decline over this past month. And that's actually pretty encouraging. I'm going to break this down a little bit into a few different sections. I'm going to talk about home prices and home sales and kind of what that looks like. And then I'm going to look at the future and what that looks like a little bit for Houston. I'm going to talk about some new construction things that are happening and what's going on development-wise in Houston that's causing these different numbers to take place. Houston Association of Realtors came out with this chart, and this chart talks about last year's home sales year over year versus this year. So last year to this year, we had around 10,000 home sales in July of 2022. This year we had 9,200 and change. That's about almost an 8.5% decrease. Now, we've been seeing this regularly. This is nothing new. We're seeing a decrease because people who locked into a 3 to 4 to 5% interest rate, just even though they have a ton of equity, they're not going into that next house specifically because they don't want to lose a, quite honestly, incredible interest rate. So the total dollar volume also went down as well. We were about 4 billion last year, like 4 and then 44 million. This year we're under 4 billion. We're about 3.7. So it's about 8.8% change. And you'll see on the chart here that comes up, it's going to be similar to that, just 8.8%. Total active listings actually went up. Now, this is something to keep an eye on. One of the things that we noticed is that according to the National Association of Realtors, which is the US in total, we need about 6 months of inventory to be in a balanced market where no one has an advantage. That's not quite where we're at. We've gone up in inventory quite a bit. We went from 2.4 to 3.2 months of inventory. That's a huge plus. We need inventory so multiple offer situations don't happen a ton, because that's pricing buyers out of the market. And it's also setting up unrealistic expectations for sellers. I have sellers that will say, well, my neighbor, in a different city, my friend in a different city got, 6 offers on their home. And why am I not getting that? Why am I on the market for 50 days? So getting back to a balanced market is definitely really healthy, and we're seeing things stabilize from that end. Housing inventory now is actually at 3.1. So we're a little bit above average, but still we're really looking, once we get to 4 and start pushing towards 6, that's going to be a balanced market. So this data is really interesting because we're unpacking, a lot of people are moving to Houston. This is happening regularly. We have a lot of transplants from different states, different cities, things like that. Houston has a really growing economy and culture, and so we're seeing a lot of people move, but we're not seeing a lot of inventory hit the market just yet. We also just got through the busiest part of the year, which is the summertime when everyone moves because school is out. So my prediction moving forward is we're really going to be leaning on new construction plus resale homes, and interest rates needing to be lightened for that 4 to 6 month inventory. I don't see that happening for a while. just because we're still seeing homes go under contract in a week or two in certain areas, certain neighborhoods, in certain areas like Katy, certain areas like Cypress, Conroe, the Woodlands. A lot of homes go under contract pretty fast out there because they're the places that people want to move to. When they're moving from out of state, they hear Conroe, the Woodlands, Katy, they hear good school districts, they want to move here, they want to live in those areas. So there's not a lot of inventory available in those areas. Something that's encouraging here is the pending family sales number. So July of last year, and mind you, we had less inventory last year, so this is definitely a part of it. We had 7,500 homes under contract. Now we have about 8,400. That's a 12% increase. That's really good, and that's actually matching the listings that are going active. So we had about a 13% increase in active listings, 12% increase in pending sales. That's really healthy. We want to get more pending sales. We want to be able to get buyers into homes. We want more people to be able to get into a home, afford a home, and also not have to compete with 30 offers and be on the home search, and then they end up, not even buying a home to begin with. So the next thing I want to talk about here is a chart that they put out talking about the increase in average sales price or average home price and median home price as well. So we're seeing on this chart, there is a steady increase, and it has been like this since July of 2018. We're seeing this steady increase in home pricing. And so one of the key data points here to look at is that you are looking at a continuous equitable increase in the value of your home when you purchase it. Now, it's not going to be anything crazy like it was the past couple of years where it was, getting 20-30% equity in your home. If you bought something in 2020, getting 20 to 30% equity. I actually had that, and I got like $70,000 in equity in my home. It's not going to be like that anymore. With the prices stabilizing and the market stabilizing to getting to a healthier inventory market and things like that, you're going to see that home prices are going to appreciate, but they're not going to appreciate at 20-30% like they used to. Most economists have talked about some sort of 6 to 9% range, which is fairly healthy. We used to tell people that 3 to 5% in Texas was good, and that's a healthy number. So 6 to 9% is definitely a healthy number as well, and that's definitely cause for optimism in our market. The one big thing I want to point out here, and a lot of our sellers, we talk to them about this when we're doing consultations, is that the average days on market has gone from 27 days to 42. So long gone are the days where you have 3 offers within an hour of your house going live on the market, and you're taking an offer with no contingencies, and they'll close in 20 days, and it's great. Those are few and far between. We've still seen some multiple offer situations and some highly favorable situations for our sellers, but I think something of note is that you should expect to have your house on the market 27 to 42 days is probably a really good starting point. I've seen houses on the market longer. We've seen houses on the market less, but I would say about 42 days is a good starting point. Now, why do I bring that up? Something to pay attention with this market report is that when you hire someone to list your home, it's going to be really important that you are working with someone that markets your home correctly, that is going to highlight all of its features. They're going to do videography, aerial photography. They're going to highlight everything that needs to be highlighted in that home to help it get sold faster than 42 days, or at least, up to that 42 days. Okay, so we're going to talk a little bit about kind of what's next for the Houston market. So we're getting out of a busier selling season. It's summertime, but we're probably middle of August right now, and we're going to be moving into September pretty soon. Kids are back in school. What's going to happen with the market? I don't have a crystal ball, but I can tell you what we're seeing that's working effectively to make these homes more affordable and give accessibility to home buyers in the market. So first and foremost, we are seeing that builders are actually offering wonderful incentives. I mean, I'm talking like interest rate buy downs galore, $20,000, $30,000 in closing costs, and all closing costs paid for. Hey, we'll upgrade your house for free. These types of deals are out there. You should be working with a professional to go find those, especially because we're still seeing the equity increase in the home. So if you're getting a deal from a builder, we've written multiple offers to builders where it's been below asking, and they've gotten an appraisal that's higher than what their contract was. So you should be working with someone to go get you a really good deal and go get that equity building. We're also probably tracking for interest rates by sometime next year to have some sort of cool off. But multiple economists and multiple industry executives are saying that it's going to take some sort of rolling recession or multiple different small recessions and different avenues to really get interest rates down to, closer to that 5%, 5.5%, even something in the fours is probably not going to happen for a while. And we're going to need some sort of economic problem to happen for that to happen. Like I said, I'm not an economist. I don't have a crystal ball. But from what most economists and most industry leaders and executives are saying, it's going to take a while to get back to, a balanced market, better interest rates. So my point being in that is that even with the slow decline in house sales, we should definitely be looking at how can I go get the best deal? How can I go invest in a property that is going to build me equity? A lot of people don't look at building houses as, an equitable thing to do, but new construction is really popular right now. So I would be taking a look at what deals they have. A little bit of a recap from all of this. Just to give you an idea, if you want any information on all of this, feel free to reach out to us. We'd be happy to talk to you about how we can help you pursue your home dreams, or if you're looking to list in this market, we can show you the best marketing tools and suites available to do that in the most amount of time, or in the least amount of time for the most amount of money possible. So if you've taken anything out of this, I would say that most of the worries and the fears, the home sales decline is slowing down. If you're thinking about listing your house, I would highly recommend it in the Houston area. It's definitely a healthy market to do so, and we're pushing towards more inventory, but it's still going to take a while. So your inventory will definitely help, and we can talk about what that marketing looks like. So until next time, we'll see you in September. Remember, if you want to get involved with anything that Selling the Snyder Group is doing, you can like and subscribe this video. You can reach out to us and get on our mailing list. We put out stuff like this all the time. And if you have any questions, please feel free to reach out below.